Both my chats are up there. Hi, YouTube. And Twitch. But mainly YouTube. Pit rate is cool. Let's go. We got lots and lots to talk about today. That's for sure. First, we're just going to do a general check-in. Oh, chat is disabled for this live stream. Uh-oh. Why is chat disabled for this live stream? Does this Wait a second. Woo. Custom browser docs. Yo, I think that's crazy, to be honest. Oh, also. I think it's crazy that YouTube resets the link to all of YouTube resets the link for YouTube chat every single stream. Crazy stuff. iRobot is dead, by the way. I don't know if you know. iRobot's dead. Mozilla's making changes. I'm getting the last of that stuff right now. That's crazy. We're gonna start talking about Firefox in a second. Because I think that's sort of the big. That's something I really want to talk about. I really want to get some clips made of this. I'm upset. I am angry about this. I think. But before we get into that, we're of course gonna look at markets. I have not seen what is up, what is down. No thanks. I just want to make sure I have all my Mozilla stuff ready to go. Also, I want to talk about. Okay. And then I want to look at this later. Okay, so we're gonna start with Firefox because this is making me upset. But first, let me take a selfie. Sorry. I'm sorry. Let's get into. Let's get into. That's fine. It's all good in the hood. Everyone should go follow me on Instagram, by the way. For all my YouTube chatters that are here, y'all should go follow my Instagram, linked somewhere. Some investing guy. It's very simple. I've managed to get this on all. I don't know how I did it. I managed to get this name on all the platforms. It was great. Anyway, we're gonna leave. We're gonna leave that up. So let's take a look at markets. Whoa. Hello. I'm smaller now. Pinterest is up 2%. Teams is up 3%. Figma's up 3%. Google's down 2%. Okay, so not a super interesting day, I think. Yeah, not a super interesting day. Cantaloupe is still mostly flat. Meta. Let's take a look at my portfolio. Intel's flat. Four-dimensional therapeutics. I love four-dimensional therapeutics because it's either up 4% or it's down 4%. It's great. It's down 4%, whatever. CVS is flat, mostly flat. MJ's up 4.5%, which is very funny, I think. By the way, if you didn't know, Donald Trump has decided, as president of the United States, that he is very interested in rescheduling marijuana. And so, President Donald Trump confirmed Monday the White House is very strongly considering loosening federal restrictions on cannabis, a move that would boost the $32 billion legal industry's margins and portend future more ambitious reforms. This has, of course, led to, over the last couple of days, this ETF is skyrocketing. It really is. This is what I'm invested in. I don't typically take bets on individual companies, especially in sectors that I don't really understand. I actually think that this is an important investing. A good investing. I think this is just good investing advice. I do think that good Lord, I can't speak today. But in general, I think that this is good investing advice. If there's a trend that you believe that you think you can take advantage of, don't go out and make individual bets on individual companies, especially if you don't understand that sector. So for a long time, the weed stocks have been kind of a bad place to be invested in because regulations are very bad, margins got crushed, and individual companies, it was very hard to pick individual winners. So, for instance, SNDL, like Sundial Rose is down 99%. This is ridiculous, right? Now, it's up a lot, in the last year because of a lot of this rescheduling talk. But this company, it's just not good. But Grow Generation. GRWG is another one of those companies. Again, very hard to down 95% in the last 5 years. The individual stocks, they just didn't perform well. But you have big ETFs like Toke. Wait, did Toke get taken down? No, Toke. Oh, it's Toke. Yeah, I still actively manage. You have Toke. You have Toke that's down 73%. So you're losing a lot of that downside because of the diversification. You lose downside with diversification, which is very cool. And so MJ did this as well. You're losing a little bit of downside in diversification because a lot of companies are going to fail, but there are going to be some companies that don't, and they're going to be pretty resilient. But in general, this has been a horrible thing to own, especially over the last 5 years. So, individual companies down 95%. the ETF overall is down 75%. Now, obviously, still terrible things to own. Not recently, however. But in general, if you want to try and take advantage of a sector-wide phenomenon, which I have, I started buying MJ. I think, what's my average price? I have no idea what my average price for it is. I need to find a good place where I can hook up my portfolio. Where are you, MJ? My average price paid for MJ is $37.04. So not up a ton, only about 17%. But yeah, so I started buying. My average price is somewhere around here, and with the president basically coming out and saying, "Hey, we kind of want to take a look at this a little bit more." It's been, obviously this has been skyrocketing because if you loosen the regulations around these companies, if marijuana gets rescheduled, then I wouldn't be surprised if, this is maybe one of the best sectors to be investing in over the next couple of years. There was a reason I bought MJ specifically. ETFs. And I'll give you another piece of investing advice. More free wisdom from a trader that's been doing it for 10 years. Can I just get all holdings? Okay. Yes. CNPS. Oh, that was such a bad. Good Lord. Yo, these are swaps. This is crazy. Yeah, Tilray. It's these companies. Tragic. It's 15% of this, so it's a very small part. This holds swaps on Trulieve, I believe, is a Canadian corporation. No, they're in Ohio. Okay. Anyway, so another free piece of wisdom for all my traders out there and for all my long-term investors out there. The reason why I went with not this ETF. The reason why I went with MJ specifically is because I wanted exposure to 3 really big companies, Tilray, Canopy Growth, and Sundial. Sundial is the most volatile. Tilray is the best company, I think, in the sector, and Kronos is just like a solid company overall as well. But those were the things that I wanted exposure to, and so MJ has 15% of their portfolio is in Tilray, 6% in Kronos, and then another 5% in Sundial. Sundial is incredibly volatile, but I don't want to own Sundial because it could go up 40%, it could go down 40%, and I still wanted a little bit of the volatility, and so you get a little bit of the volatility, but you have a lot more diversification, and so you get a lot smoother of a chart instead of like, no, it was Sundial. So like over the last month, it's gone up 100%, and then it fell 40%, and now it's up another 30%. I just don't like that volatility. I, as an investor, typically in longer term companies, I just can't handle that volatility. And so if I can still get a lot of that volatility as one of the larger holdings in an ETF, I'll go for that instead. But as you can also see, the biggest holding in this ETF is another ETF, which holds what I think are some pretty solid companies. Also, these are mostly swaps and stuff. And so, and a lot of these also, I believe, are Canadian companies. And so, obviously, weed laws are a lot looser in Canada. And so it's good to have it's good to be invested in the Canadian companies because that's just like a growing sector. Also, another free piece of investing advice for all my long-term investors out there. If you want to know what's going to happen with cannabis in the United States, you can have a pretty good idea by looking what happened to all the cannabis companies in Canada. It's true. It's true. I'm down 10% on 4-dimensional. Yo, Corsair's actually coming back, I think. It's dead. It's not coming back. They had rough earnings. That was a tough way to go. But yeah, so I would be hesitant to start buying any shares right now. In fact, I might start selling some of my shares of MJ. Just because I don't know how long the hype is going to last. I don't know if the president is actually going to go through with this. There's a lot of unknowns, I think, in this general sort of in this general period of time. So yeah, but hey, you know what? The ride was good while it lasted. At least we made some money. MG's only up 3%. It started at 4.5. Now it's only at 3. The overwhelming weight of the horrible performance of the stock market is weighing down. I just saw 99 something. What do I have for 99? Average price paid. CCRN. I'm only down 15% on my CCRN shares. And it is still 25% of my invested capital right now. Wait. It's 25% of my invested capital right now. I'm still 40% cash, which is funny. It's Intel. My Intel is down. Why is Intel down? I did what? Oh, just falling a little bit. Whoa, I'm positive on one of my bonds? This is crazy. I can't believe it. I'm positive on one of my bond ETFs? This is crazy. I'm only up 1%, by the way. BND. I'm still down, 7% on TLT? Unfortunate stuff, I think. But yeah. Still kind of a quiet day in the market, I think. Warner Brothers Discovery is still popping off. Warner Brothers is begging their shareholders to reject Paramount's bid. You know what? Maybe I can get a short out of this. I'll read it real quick. Warner Brothers board rejected Paramount Skydance's $108.4 billion hostile bid on Wednesday, saying it failed to provide adequate financing assurances. In a letter to shareholders disclosed in a regulatory filing, the board wrote that Paramount had consistently misled Warner Brothers shareholders that its $30 per share cash offer was fully guaranteed or backstopped by the Ellison family, led by Larry Ellison. It does not, and never has, the board wrote, of the guarantee of Paramount's offer, noting the offer posed numerous significant risks. Very bad. Very bad, I think. Warner Brothers hasn't even set a shareholder vote on the deal. Crazy. Ted Sarandos, co-CEOs. Anyway. It had arranged airtight financing to support the bid with $41 billion in new equity assured by the Ellison family and Redbird Capital. $54 billion of debt commitments. Wild stuff. Warner Brothers board. I think one of the things that I want to do, actually, we're gonna pause for a second. We're gonna change something. I noticed this when I was I noticed this when I was editing one of my videos the other day. No, not window capture. Video capture. Transform. Edit transform. We're going to we're going to crop left a little more. Nope, wrong way. We're going to uncrop the left, and then we're going to crop the right. Oh, we're going to crop the right a little bit. I want more room. I want more room that way, less room that way. Anyway. That's that. Yes. This is exactly what I was saying in my video, which you should go watch. Warner Brothers questions Paramount's creditworthiness. This $12 billion company with cash flows of like $200 million and sometimes negative cash flows cannot support the debt of Warner Brothers Discovery. Warner Brothers Discovery can barely support their own debt. Do you think Paramount Plus, a company that's going to be a net drain on the cash flows of Warner Brothers Discovery, not only are they unable to manage that company, which they're buying, but Netflix is going to manage Warner Brothers Discovery better than Paramount Skydance. Because when was the last time you saw any good media from Paramount Skydance? The last piece of good media from Paramount Skydance was the last thing that Scooby-Doo made. I'll stand by that. Yeah. So, yeah, this is what I was saying in my video. I was like, Netflix can easily buy this company. They can take out a ton of debt, and they can service that debt very easily. They can get the whole catalog. It's great. It'd be so easy. So it just makes sense. Paramount Skydance should not do this. Paramount Skydance should not win this bid. Netflix's offer is backed by a public company with a market cap in excess of $400 billion with an investment-grade balance sheet, the Warner Board noted. The company has told Warner Brothers it would keep releasing the studio's films in cinemas in a bid to ease fears that its deal would eliminate another studio and major source of theatrical films, according to people familiar with the matter. Okay, whatever. Paramount, by contrast, has a $15 billion market capitalization and a credit rating a notch above junk. Warner Brothers noted on Wednesday. Should the deal close, Paramount would have a debt ratio of 6.8 times its operating income with virtually no current free cash flow. The bidder would also impose what Warner Brothers would be an onerous operating restrictions on the company due to the potentially lengthy period between signing and closing, including limits on new content licensing deals. Paramount plans to achieve $9 billion in synergies across the two studios, was described as... Didn't they can the last Scooby-Doo project? Probably. What was the last Scooby-Doo project? What? The animated film sequel Scoob Holiday Haunt, the special Scooby-Doo and the Haunted High Rise, and Scooby-Doo and the Mystery Pups due to financial restructuring after the merger. Bad. Trash. But this is rich, right? Paramount's plans to achieve $9 billion in synergies. Paramount's a $15 billion company. Paramount doesn't even do $9 billion in revenue. They're not going to save $9 billion in expenses. Yeah, apparently they had a sequel and they had 2 other like spin-off movies that they canned for good reason. Not good reason, for no good reason. Was it actually canceled because of the merger? Oh, shelved in 2022. It was shelved in 2022 because of, well, Holiday Haunt. Streaming focused films and toward theatrical releases. Why are they... What? Everybody was like, oh, COVID's over. Okay, time to go back to the theaters, I guess. Good. Fan-made live action pilot. Crazy. Anyway. Warner Brothers board dismissed Paramount's charges of unfairness. They had said they'd been... I still can't talk. Good lord. They'd been set forth in filing by Paramount last week. Also, hi, Lucas. After each bid, we informed P-Sky of the material deficiencies and offered potential solutions, the Warner Brothers board wrote. Paramount Skydance is just wasting Warner Brothers' time at this point, I think. Despite this feedback, P-Sky has never submitted a proposal that is superior to the Netflix merger agreement. True. Netflix has offered a $5.8 billion breakup fee that was higher than Paramount's $5 billion breakup fee. A reminder, by the way, Paramount Skydance is a $14 billion by market cap company. Just so you know. They're offering $5 billion for the breakup. Out here looking like Jeff Bezos. Paramount and Comcast are getting in on the action too. Crazy. That was November 21st? Oh, that was a month ago. Never mind. And Paramount Skydance is down. This is so stupid. Ford? Uh-oh, Ford is doing something. Well, what's happening with Ford? Oh. Ford takes $19.5 billion hit as it pulls back on electric vehicle plans and halts F-150 Lightning production. Oh, that's tough. Ford on Monday says it's pulling back on electric vehicle plans, a move that will result in a $19.5 billion charge against its earnings to be taken mostly in the current quarter. Ooh. On hold indefinitely. Ford's the next generation of F-150 will have a 700-mile range and improved heavy-duty towing. Sort of makes sense. I wonder what they're actually writing off. Was this like an AK that they filed today? I'm curious. Okay, CNBC. I trust them more. E-Rev. Oh, interesting. The last couple of months have been very clear to us. The very high-end EVs, the 50, 70, 80,000 vehicles. Yo, he left out 60. He didn't want to say... He didn't want the 6.7 joke. Crazy. True. Classic Chevy. Isn't Chevy owned by Stellantis? No, Chevrolet is owned by GM. I'm an idiot. Okay, what are they actually writing down? Are they writing down like a plant? In special, okay. Ford Motor expects to record $19.5 billion in special items related to restructuring around its business priorities and a pullback in its... Okay, I don't know what that means. Okay. Anyway, Ford is doomed, I guess. Well, okay, so Ford is the first major company that has decided that they're going to restructure their business around getting rid of EVs, which is tragic, I think. But okay, it's broken. Okay, here we go. I don't trust this. This is AI. However, $8.5 billion for costs associated with canceling future EV models. Okay, so they're gonna stop selling the F-150 Lightning, and they expect to make $8.5 billion less because of that. $6 billion from ending a joint battery venture with SK On. I wonder if their stock is tanking. And then $5 billion in additional program-related expenses. They have to fire all those people they have to fire the entire marketing department for their EVs. That's so tragic. SK Innovation is up 0.5% on the news. Wild stuff. Must not have been a very big part of their business then. It is SK, so yeah, that's not good, I think. $19.5 billion. They got to restructure it. They got to close some stuff. They're just not going to sell. I'm not going to sell stuff. But those sales only came with 30,600 vehicles, or less than 6%. Wait, total EV sales was 6% of Ford's entire business? Doesn't Ford sell like... Doesn't Ford sell like hundreds of billions of dollars every quarter? Revenue was $50 billion in quarter three. What, 3 billion of that was EVs? That's crazy. Now, granted, I will say I think that this is somewhat important. The Ford Model E, they are losing money on every Ford that on all the electric Fords that they built. But obviously, it's new technology. So like it's new technology. It's not exactly going to be cheap. So the Ford Blue, I don't know what that is, but yeah, the Ford Model E lost $1.5 billion. Ford Blue. Revenue up despite the fact that their actual earnings are down. Lincoln Navigator. I didn't know Ford owned Lincoln, although I guess that makes sense. Adjusted free cash flow. They have to adjust their free cash flow way down. Capital spending. They're cutting capex next year. Interesting. Net tariff impact was $1 billion. Guys, it's working. Oh, good lord. That's how good Ford is doing. Their revenue is up. but their free cash flow is mostly unchanged, despite the fact that they had to pay $1 billion to the U.S. government. Yo, I can't wait for the Supreme Court to overturn the tariffs, and then the government has to pay all that money back, and Ford is like, "Oh yeah, actually, we got an extra $1 billion from the government." Oh well, poor Ford. Um, wait, Hut 8 pivoted out of. Yo, remember when Hut 8 was just a Bitcoin mining company? What are they doing now? What they went they went from one fraud to another. What are they doing now? To AI hosting. Yo, Hut 8 companies just like pure fraud basic. I love companies like this. I love companies like this so much. Cuz it's like, guys, we're doing crypto mining. Here's 1,000% gain in our share price. Oh no, crypto isn't good anymore. Guys, here's a 90% drop in our share price. Oh wait, guys, we're pivoting. Now we're going to do AI data hosting. Oh, here's another 500%. I love companies like this. It's just fraud. I love, bro. Their Hut 8 is getting put next to CoreWeave and Applied Digital. Yep, those companies are legit. Sure. Anyway, Paramount Skydance is cool. The last thing we'll look at, and then I'll get into one of the big videos for today. Coursera is buying Udemy, creating $2.5 billion firm to target AI training. Udemy's up 27% on the news. Online education platform Coursera said on Wednesday it would buy rival Udemy in an all-stock deal, valuing the combined company at $2.5 billion, as the industry consolidates after a post-pandemic slowdown and heightened investor scrutiny. Udemy shareholders would receive 0.8 shares of Coursera for each held, valuing the company at about $930 million, according to Reuters calculations. Coursera's up 6, Udemy is now up 26. Very cool. The deal unites two of the largest U.S.-based online learning platforms at a time when consumer course enrollment growth has cooled from pandemic highs, promoting companies to seek scale and pursue enterprise clients and more predictable subscription revenue. The only reason I care about this story is because this is I remember for a while, nonstop, Coursera and Udemy sponsorships on YouTube. I remember this. There was an era when everyone was sponsored by Udemy. Now it's what's the new one? Skillshare. I don't see much from Coursera anymore. How are they doing anyway? How's Udemy doing? Like overall? Down 100% basically. That's why they're getting bought. How's Coursera doing? Also down 80%. Two bad companies combining, a tale as old as time. One reason I think it's interesting is because it reminded me, I wrote about a company a long, long time ago. Curiosity Stream. I don't know if you know what this is. Curiosity Stream. Company that's down 60%. This was a SPAC. This was such a hype SPAC in 2020. It's crazy stuff. Curiosity Stream is a streaming platform. Shocker. That does educational and documentary style content. They're trading at $243 million. They are a micro cap company, and you've probably heard of them from They own another company. Of course, CuriosityStream owns a company called Nebula. Nebula is very heavily promoted on YouTube by a lot of those sort of educational content creators. I think for a pretty good reason. I think it's a pretty, seems like a decent platform. Also, it's incredibly cheap. It's like $60 a year, and you get access to everything on CuriosityStream and everything on Nebula. But I remember a bunch of years ago, 3 years ago, 4 years ago, 4-ish years ago, I remember talking about CuriosityStream and can I get just the filings? Ooh, let's look at their most recent presentation. Okay. Clint Stinchcomb is still the CEO. Good for him. This company was only founded 10 years ago too, which is wild. They have 20 million paid subscribers. What was it like 3 years ago? If I remember correctly, it was like under 10 million, right? Oh, never mind. In 2021, it hit over 20 million. Tough way to go, I think. So they might have lost some subscribers, I think. Despite that, Q2, this is Q2, so not the most accurate. 53% revenue growth year over year. Very cool. I think they had a really bad year last year. 600%. Oh, it's all content. Oh, yeah, I forgot. Yeah, okay. CuriosityStream, I think, did something very stupid. So over the last year, they're up 150%. They soared to over almost probably over $7 a share. They've since fallen back down to $4. But they were trading at 50. They were basically going to go bankrupt here in a little bit. But in 2024, they made what I thought was kind of a bad decision when they decided to start actively licensing hundreds of thousands of hours of video and audio content to top-tier technology companies for generative AI training. Now, I am fully willing to admit, well, I do not like this personally, because I do not think that companies, because I do not like generative AI. I am anti-generative AI for the most part. Hang on. Never mind. I'm anti-generative AI for the most part. I think it is a good business decision to basically force the people that are training their AI models anyway to get money out of them. I think it's good. I don't like that they made the decision, although I can couch my distaste of them letting AI models train on their content with the fact that AI models are probably going to train on their content anyway, and so at least they're making some money while it's happening. So, good business decision, I think. Either way. That's their main revenue growth driver, by the way. Is licensing fees. For their subscribers are falling, but they're doing licensing now, so they talk about how much stuff that they have on their platform. Wow. I don't think I've heard of any of these. Yeah, sorry. But if you're curious on what CuriosityStream actually has, this is what they have. They have David Attenborough, which, like, that's pretty cool, I guess. Yo, going nuts, just like me. Be for real. Um, wait, what? I love when companies do this. I love this so much. Library defined by breadth, depth, and quality with flexible rights. We believe our quality outpaces the rest. There's a survey here. I don't know what the context of the survey is, but it's either very good or I don't know. Um, and Curiosity Stream is 79-3. Everybody thinks it's very good. The problem is this was done by Park Associates Research on behalf of the company. Unfortunate. Subscription pricing tiers. It's $40 a year. That's wild. And Curiosity University. Yo, Catholic Stream? They own Catholic Stream? Why? That's crazy. Fair enough, I guess. I'm so curious. Yo, this looks exactly like Curiosity Streams. Yeah. That's so funny. Good for them though. You can get your Catholic content, you can also get your educational content. Yeah. Nice. I like how they talk about the market in general. Very cool. And then they talk about ethically sourced, no scraping, no union or talent restrictions, no creator content, experienced IP attorneys. So Curiosity Stream is letting everybody train on their videos, but they're not letting Nebula train, which is actually kind of cool. Which I think is the implied language there. Yeah, revenue was barely growing, and then it was like, okay, let's license our content. One of the cool things that I talked about when I talked about this company like 4 years ago was how much cash they had on the balance sheet. They were $100 million market cap company, and they had like $80 million in cash. It was great. Now they do not have that anymore. They burned a lot of that cash, and but their liabilities have stayed relatively low, which is cool. Obviously, it's a software company, so they're pretty capital light in general. And then the warrants, they still have warrants from 4 years ago. It was crazy. Only $7 billion in cash, which is unfortunate. But anyway, that was Curiosity Stream. A company that I really liked a couple of years ago, and I thought, I'm pretty sure when I looked at the company and said that it would be worth looking into. When did I write about this? Let me see if I can find this. Okay, I don't think I'm going to be able to find it. I can't even find my own YouTube channel. Tragic. I think I'm. Yeah. Did I write about this in on Substack? Did I write about this on Substack? Yo, what a cool logo. Nah. Okay, I never. Oh well. I talked about it at some point. I don't know when I talked about it, but I did. Like 4 years ago, and was like, you know what, this is kind of a company. This is kind of a cool company. I think people should check out at some point. Okay, I think we're gonna get stuck in to a video. We're gonna record a video live. But first, I don't know how many of y'all use Firefox, but they've been doing some things that I do not personally like, I think. Firefox. It started last year with Mozilla laying off 30% of its staff and dropping its advocacy division. This was November 5th of last year, so a year and a month ago. Mozilla said that the nonprofit arm of Firefox browser maker said it would lay off 30% of its employees. This was something like 40 people. There are not a lot of people that work at Mozilla. However, this was still kind of a big deal. I was like, man, what are they doing? What are they doing over there? Firefox laid off 30% of its staff and dropped its advocacy division. It wasn't great. Advocacy, despite this, they said that advocacy is still a central tenet of Mozilla's foundation, of the Mozilla Foundation's work, and will be embedded in all functional areas, without providing specifics. Which actually, I think that this is a sort of a microcosm of what my problem with Firefox is recently. Advocacy is still a central tenet of Mozilla's Foundation's work and will be embedded in all other functional areas, without providing specifics. Our mission at Mozilla is more high stakes than ever. They say this a lot too. We find ourselves in a relentless onslaught of change in the technology and world, and idea of putting people before profit feels increasingly radical. Which, like, fair enough, but it would seem as though they are starting to put profit above people, or at the very least, they don't know what they're doing. A couple months later, so March of this year, so February, it started in February, and then kind of there's a lot of backlash to change. There was an update in March. Mozilla updated their terms of service. For a very long time, plastered all over Firefox's website was this idea of, like, we will not sell your data to anybody. We promise. And then late in February of this year, they decided to make some changes to their wording. So they completely took out the part about how they would no longer sell your user data to advertisers, and instead they replaced it with, when you upload or input information through Firefox, you hereby grant us a non-exclusive, royalty-free, worldwide license to use that information to help you navigate, experience, and interact with online content as you indicate with your use of Firefox. This was very broad. People had questions. And Firefox did not answer those questions. Instead, they just revised those terms and said, you give Mozilla the rights necessary to operate Firefox. This includes processing your data, as we describe in our privacy notice. And it also includes a non-exclusive, royalty-free, worldwide license for the purpose of doing as you request with the content you input in Firefox. This does not give Mozilla any ownership in that content. So they clarified the language without really clarifying the language. And so this I think turned a lot of people off. And there was a big, earlier this year, there was a lot of heat around getting rid of Firefox because of this specifically. Because, like, this is a big change, right? Mozilla and Firefox have always been these sort of stark advocates for privacy and for responsible use of user data. And so for them to be making these sort of subtle changes behind the scenes is very nervous. Makes me very nervous, I think. But the pushback against Mozilla terms of service followed Google's new ad tracking policy, which is another big piece of drama. It has drawn scrutiny from regulators and watchdogs who say it raises privacy concerns. The ads platform program policies, which went live on February 16th, 2025, allow the use of IP addresses to fingerprint users and reach them across platforms without the need to re-identify them. The UK Information Commissioner's Office has called it an irresponsible change. Organizations seeking to deploy fingerprinting techniques will fingerprint. Oh my goodness, I cannot talk today. Fingerprinting techniques for advertising will need to Organizations seeking to deploy fingerprinting techniques for advertising will need to demonstrate how they are complying with the requirements of data protection law, the ICO said. So, Firefox was in a lot of heat at the beginning of this year. And they weren't doing themselves any favors. And they've made yet another change, which I don't know if this is the straw that breaks the camel's back for me, just because I love Firefox and I've been using it forever. But I very heavily disagree with this. Mozilla has appointed a new CEO and has said that their new CEO, the future of Mozilla is AI, building an AI browser. They've appointed Anthony Enzor Demio. When I first heard Enzor, I thought it was Exor, which is that really big sort of like mafia style family in Europe, but it's not. It's Enzor. Mozilla's next chapter. Today, I step into the role of CEO of Mozilla Corporation. Laura Chambers did not do well, I think. She received a lot of backlash for the changes that she made at Firefox and Mozilla more broadly. As Mozilla moves forward, we focus on becoming the trusted software company. This is not a slogan. It is a direction that guides how we build and how we grow. It means three things. So these are the three guiding principles that Mozilla will carry on with their brand new CEO. First, zoom in a bit. First, every product we build must give people agency in how it works. Privacy, data use, and AI must be clear and understandable. Controls will be simple. AI should always be a choice, something people can easily turn off. People should know why a feature works the way it does and what value they get from it. This sounds very good on its face. The problem is, earlier this year, we see these commitments that Firefox makes to user privacy and to data and responsible use of data, and then we see them quietly change these things in the background. And so this does not give me much hope. This does not inspire confidence in me that, like, Firefox wants to say, oh, we're going to have all these great AI features in the future, and we're always going to give people a choice. We're never going to, force AI on anything, but we're still going to use it quite heavily. And so, I don't know. I think the first couple of months of the year and last year, the changes that Firefox have made to their platform and to their company in general, it just doesn't inspire confidence. Second, our business model must align with trust. We will grow through transparent monetization that people recognize and value. This is going to be interesting. I don't know why one of the core tenets of a charity, a nonprofit. I don't know why one of the core tenets of a nonprofit would be to grow through transparent monetization that people recognize and value. that seems like a bit of a weird. Could you imagine like if the Red Cross was like, yeah, our second pillar is that we think that we should monetize responsibly. It'd be like, all right, that seems I don't know about that one, Chief. But third, Firefox will grow from a browser into a broader ecosystem of trusted software. Firefox will remain our anchor. It will evolve into a modern AI browser and support a portfolio of new and trusted software additions. We're getting another ecosystem. We're getting the Mozilla ecosystem, which Google obviously did this with their whole ecosystem. You got Gmail connected to all the other Google services like Sheets and Docs and all that. And so obviously Google isn't the most responsible with data, with Gemini and all that, and training their AI models on user data. But as a sort of response to Google's ecosystem, another company by the name of Proton, which if you read through Proton, you sort of get a Mozilla feeling in a sense. Proton is another company that has very much so been around for a very long time and seeks to provide user privacy. They do a lot with encryption. They do a lot. It's very good. They make very good products, to be honest. So Proton's big thing is like privacy by default. A better internet starts with privacy and freedom. As a result of Google's sort of mishandling of people's data, Proton is also a nonprofit, by the way. The Proton Corporation. They are owned by a nonprofit called Proton. It's great, but in response, obviously, to Google, Proton has created their own ecosystem. So in addition to Proton Mail, which was sort of the big thing for many years, you had Proton Mail. Now you also have Proton Docs, Proton Drive, and Proton Sheets, much like the Google ecosystem. All of this is free, kind of, but you sort of have to pay very quickly. Also, they have their own thing, Lumo by Proton, crazy. But yeah, so like all of this is free. You can use it. A big response to Google, basically. And so it seems as though, at least from my reading of this, that Mozilla might be trying to do the same thing, which would be a very interesting thing, because Mozilla has obviously been this like privacy, data privacy sort of company for a very long time, and, a free and open internet. Proton has also been this, but Mozilla has been slipping, I think, in this particular area, where Proton has remained very steady, very rock solid, in their quest for actually keeping user data private. So either way, earlier this year as well, I moved. By the way, earlier this year, I tried a different browser, because I don't necessarily care all that much about user privacy. Like, I think it's important. I think end-to-end encryption stuff is good. It's not necessarily like a foremost concern of mine. I can appreciate. I actually just like Firefox. I just think Firefox makes a good product. I think Mozilla. I think it's a great browser. And so, with Firefox being such a great browser, there was another browser that came along that I thought was a really good browser. And so I actually switched entirely to it for the beginning of this year. This was called Arc. If you have never used Arc before, it is a very good browser, I think. It's quick, it's light, it does not use that many resources. It uses less resources than Firefox, which is crazy. Chrome obviously gets a very bad rap because they're very resource intensive. Very resource intensive. Firefox is much lighter, and Arc is about the same. I think it's just in general a little bit lighter. But Arc is built on top of Chromium, which is the sort of stripped down version of Chrome. But anyway, I switched to Arc. Arc has some sort of unique intricacies that I think make it an interesting browser. I wonder if I can actually browser capture. Sure. I'll switch. I actually just create another one. Window capture. Well, transform, fit the screen. So this is my actual Arc browser. This isn't like my actual Arc browser. But one of the unique things is sort of the sidebar, right? And you have these bits up top. You know, it's cool. I like it. It's good. I'm sure this is selling it amazingly. But I liked sort of having this sidebar of tabs, and they also nest, which is very cool. And you can also sort of combine everything together. It's very cool. By the way, Web Tiles, very great game. Anyway, if you never tried Arc, I would encourage you to, well, not anymore, but Arc was supposed to be this sort of competitor to a lot of the big browsers. And I think it got a lot of power users, which was great. Arc got a lot of users because like it's a clean setup. It's very light. It has a lot of customizability. It was only on Mac for a very long time, and it recently just came to Windows. And so, you know, it's a good browser. But I do think it is for power users. I think it is for people that want a lot of customization in their browser. The problem is, I don't know if this was a deal with like the I don't know if this was a deal with just like they just weren't making money off of this browser, but the browser company announced that Arc was not going to be the development of Arc was no longer going to be supported. The browser company explains why they stopped developing Arc. They literally said, "We're just not going to keep building this browser." Well, why did they do this? The browser company has moved on to Dia because Arc was just too different. Yo, I had to pay for a Verge subscription? Tragic. Anyway, basically, Arc said that they're no longer going to develop. Let me see if I can find Dia browser. Arc basically said that they were no longer going to develop Arc because they wanted to develop a fully AI browser. And that is what Dia is. And so basically, it's a browser that looks like every other browser on the planet, except it has AI built in to every single facet of what you could possibly use a browser for shopping, for writing, for everything. Privacy and I very heavily doubt that. But anyway, that's kind of neat. At least it looks cool. But yeah, so Arc said, "Hey, here's a competitor in the space. Download our browser," and it was actually like kind of a good thing, kind of a cool browser. Maybe a decent competitor in the future to Firefox at least. And then they completely abandoned it because they also want to go for an AI browser. So, I don't know. There was I saw something. Yes. this. And that's why I was on Twitter. I found out about Mozilla's new CEO appointment on Twitter, and underneath the that tweet was this video. Hang on. Oh, I just grabbed the last bit of it. Underneath that tweet was this video. And I'm going to desktop.
It's not AI.
And that's about it. So this is for a browser called Vivaldi browser, which I had never heard of before, and am going to take a look at right now. We're not working, we're fighting. That's what a great introduction. What a great introduction to your browser. Guys, you know what we're doing? We're not doing AI. That's about it. And so I think that's a real selling point for me. That's a real good selling point for me, I think. And so I will be personally taking a look at Vivaldi, I think, off of stream. I might download it, might take a look. Privacy isn't just a feature of Vivaldi, it's a philosophy. Where have I heard that before? No profiling, no data mining, no nonsense. With built-in ad and tracker blockers plus end-to-end encryption for sync data. Very cool. Very, very cool. And one of the wow. They have their own email, they have their own browser. Wow. Automotive? What do you mean automotive? The browser in your car? What? Vivaldi for Android Automotive OS is a full-scale web browser with advanced tab management, streamability, and top security measures. I've never seen such a thing before. Lamborghini. What a wacky and wild world we live in. Anyway, Vivaldi seems to be a core competitor, just moving into the future, I think. This is great. Calendar, mail, feed, reader. They build a browser. That's about it. This kind of scares me though. That's that's an insane amount of tabs over there. Yo, you can double your tabs? Crazy. Anyway. Yeah, I think Mozilla has been doing some things that I do not like. And so I might be switching away from them forever. Unless Mozilla sort of gets their act together. And I don't even really care that they're implementing AI into their browser. It's just like I think Mozilla has eroded the trust of a lot of their users over the last couple of years, just with these sort of like stupid changes where they're slowly rewording things or they're like firing their staff in kind of weird ways. So I think it's incumbent on Mozilla to rebuild the trust of their users, and until then, I think it might be worth looking into alternatives to Firefox. I will happily go back, however, if they are able to rebuild that trust. Proton, privacy by default. But yeah. That's crazy. Check your Android TV box. Free VPN free VPN Chrome extensions with 8 million downloads log AI chats. Well, who could have seen it coming, really? A free VPN tracking users? Really? True. Anyway, Firefox, very sad, very sad. Yo, Oracle is going down. Okay, they're still not even down to where they were at the beginning of this year. This, I'm not joking. This is literally Cisco. I'm I'm so serious. This is literally Cisco. It's the same. I'm sorry. It's the same chart. It's the same chart. Massive run up, 100,000%, and then it falls 80%. Oracle, massive run up 300,000%, and it's fallen 40%. I don't know what to tell you guys. It's the same chart. Anyway, Oracle's down. What a funny chart, dude. Oracle's down a little bit. Oracle's down another 6% today, shaving off a lot of their market cap. Another 10 billion. Wait, what is Tesla? What's Tesla at now? Tesla's at 1.5 trillion. Yo, why are they at all-time highs? What is Tesla doing? Why is Tesla at all-time highs? Did they cure cancer again? What's going on here? They've missed every single earnings report. You know what? I don't say this very often. I think people should short Tesla. Is there... TSLQ. There's an ETF you can buy that shorts Tesla. where it gives you double exposure to every Tesla share. It gives you double exposure. So if it goes up 5%, you lose 10%. If it goes down 10%, you get 20%. It doubles whatever the price movement is, and it is green on red days. I've thought about buying this for a very long time. However, it's generally not a great. It's just not been great to own, I think, just in general. But now might be a good time to. Like, this chart is so stupid. This company is not doing. Didn't we just get a report that Tesla sales December 1st, Tesla new registrations plummet in key European markets in November. What? Let me in. Do I have an ad block? I do. Pause on this site. Tesla. Yo, what are you doing, FT? Or Reuters? You're killing me, Reuters. Tesla wants to launch a cheaper standard EV in Europe to blunt sales. They literally have to cut prices in order to keep selling. Yeah, according to its most recent report, the European Automobile Manufacturers Association said Tesla electric vehicle registrations in Europe fell to just 7,000 units in October, a 50% drop compared to a year ago. Total EV registrations rose 33%, and Tesla lost 50% of those. Wild stuff. Total automotive revenues rose 6% year over year to $21 billion. I wonder where they're selling them. They must be selling in like China, or they're growing tremendously in the United States. What does capacity mean? Cumulative miles driven with FSD. They're doing 120,000 miles in FSD, but it's all supervised, so that's tough. Making a lot of gross profit off of their energy storage stuff. That's pretty neat. So they're cutting prices across all their cars. That seems like a sign of a healthy and growing company. I drove past this Gigafactory in Texas a couple of months ago. I was like, yo, it's the Gigafactory in Texas. Crazy. It was great. We're crazy. Actually, I want to check one other thing. Weird. But cool. Good stuff. Yes, sir. Where is my hairbrush? That's enough Tesla for the day, I think. Anything else? Anything else going on? Everything has gone flat. Yo, four-dimensional therapeutics is down 10%. What are those guys doing over there? Do you know how shorting works just in general? The general idea. Okay, so I'll explain it again real quick, and maybe I'll make a short out of this. So shorting, basically, you're going out into the market and you're purchasing a stock for a price, and then you're making an agreement with a counterparty, or you're going out and buying this contract between two parties. There's a counterparty, and you're agreeing to sell those shares back to that person at an agreed upon price. For shorting, that price is higher. And so if the stock goes down, then the difference between those two prices, that's what you gain. And so what TSLQ holds are these contracts, basically. Can I get just the holdings? So they hold these contracts. So you can go out and you can buy these contracts regularly, or you can buy this ETF which holds these contracts. And all you have to do is pay like a small management fee of 1%, which is kind of high, but portfolio. So yeah, they hold swaps. They hold some US dollars, $320 million. How much is in the total fund? They hold these contracts where basically they hold the underlying shares, and then they're agreeing with a counterparty to sell those shares back to that counterparty at a higher price. So if the price goes down, so they're going at let's say your strike price. What's the actual price of Tesla right now? A Tesla share. So let's say you go out and you buy 1,000 shares at $500 a piece, and then you agree with a counterparty that you're going to sell those shares to them at $450. So every dollar that Tesla goes below 450, you get more and more money, but you have to hold those shares. And so that you can go out and you can buy that contract. And so this TSLR is not the exact ETF, but it's basically the same concept. They just hold those contracts. And so every time those contracts would expire, they would just go and buy new ones. The only problem is unfortunately, you kind of have to get the timing right on these things. So that's what makes them such a kind of a scary investment sometimes, is over the last year, this has obviously lost 80%, but there have been times in the year where you could have made, 10% there, 20% there, 40% there. But if, in general, Tesla goes down, if Tesla gets another one of these where it drops like 60% over 2 years, you make a lot of money. Like here, see? This is actually why this whole fund was launched. It made 100% in its first 3 months on the market. No, that's a year and 3 months. No. Actually, yeah, that's only 3 months, September to December. Its first 3 months on the market, it made 100%. But since Tesla has had relatively good, since Tesla has been relatively rock solid over the last couple of years, not rock solid, but has gone up and to the right over the last couple of years. This has been a very bad investment. However, one day it will be a great investment, because Tesla, I don't know what to tell you, man. Tesla's a terrible company at this. The fact that a company, we were just looking at it's doing $20 billion a quarter, 20, 40, 60, 80. It's doing $80 billion a year. The fact that an $80 billion a year car company, which has margins of like 4%, which is lower than the average across the rest of the sector. The fact that an $80 billion car company is trading for $1.5 trillion, mind you, Ford does $51 billion in revenue per quarter. So they do $200 billion a year. They do $200 billion in revenue. They're trading at a quarter. They do more in revenue than the entire market cap of the entire company. And they almost do that in profit, right? The profit, I think, was like $8 billion. They're only trading at 8, 16, 24. But that's because these Ford specifically has very low margins. Ford has incredibly low margins. Their margins are like 6 to 8% because cars are not... Selling cars is not profitable. Even if you raise the price a ton and people buy them, selling cars is not profitable. It's the same thing with Stellantis, STLA. I've been crashing out over Tesla for literally years. Give me this. How much do you do in revenue? Net revenues. This company, Stellantis, which, if you don't know what Stellantis owns, they own Jeep, Ram, Dodge, Fiat, Peugeot, Vauxhall, Maserati, Abarth, Lancia, Citroen. They own all sorts of companies. These guys, they own a lot of companies, a lot of big companies. They also own Chrysler. This company did $153 billion in revenue last year, and it's trading at $29 billion. And the reason is it's not profitable to sell cars. The reason why Tesla is trading so high is because Elon Musk has successfully convinced the market that Tesla is not a car company, that Tesla is a technology company, and that full self-driving is right around the corner. And, oh, wait, full self-driving isn't right around the corner, but you know what is? Robotics. And so he pivots every couple of years to whatever the big trend is. And actually, it goes back to the exact same thing with Hut Mining Corp. We were looking at this earlier. Hut 8 is a company that's been around forever. Now, this is just the first company that comes to mind, obviously. But this company is basically pure fraud, right? So it starts in 2018. It says, hey, we're a Bitcoin mining company. What we do is we go out, we buy miners, and we mine Bitcoin. And that is literally it. And then, Bitcoin price pumps super hard in 2020, 2021. Company pumps super hard. It turns out Bitcoin mining is not profitable. They fall 90%. And then all of a sudden they get to here and they're like, hey, we're going to go bankrupt. Why don't we pivot to the new hot topic, which is AI data hosting? So all of a sudden this company, which was a Bitcoin mining company, sells all of their Bitcoin mining equipment and goes out and buys AI data center infrastructure stuff. It's like, this is just fraud at this point. And so this is sort of the game that Tesla plays as well. They play accounting games, which if you're not familiar with is a wild read. The amount of fraud that I think is on Tesla's books is staggering. But yeah, they play these stupid games. Crash out over. $1.5 trillion. It fell 50% almost. It's also an incredibly volatile company. I don't know why anyone would ever own it. What happened if I... Now, I will say, I did own Tesla at one point. I owned Tesla here before the stock split. I was buying at $120 a share. I was buying in 2017, 2018. And then I sold here-ish, around $500 a share. When our beloved CEO started to go a little crazy, I think. And the stock price went up a lot. Yo, FDMT is just dropping like a rock. They get any bad news today? Actually? Any bad news? Uh-oh. They got news, which is tragic. Four-Dimensional Therapeutics announces positive interim clinical data from cystic fibrosis lung disease. This is good news. Oh, this is some stupid AI company thing. Okay, so Four-Dimensional Therapeutics, I guess, has good promising results for one of their drugs, and their stock fell 12% today. So, your guess is as good as mine. I think. I haven't been recording this entire time. I'm glad you can download Twitch VODs. And I'm glad I stream at 1080. And I'm also glad I have incredible internet that can handle. I haven't dropped a single frame all stream. That's insane. Time to go YOLO my entire portfolio into TSLQ and hope I make it big. That'd be great, wouldn't it? I could if I YOLO my if I could build a brand off of shorting Tesla. That sounds like a good idea. Guys, I shorted Tesla and made $1 million. This is why you should listen to everything I have to say. Yo. The most recent short. Okay, funny story. Pause break. The most recent short I uploaded is performing really well. It's got 1.5. It's got 1,500 views. The like to dislike ratio is 5-3. Tragic. The title of the short was originally the Bitcoin guys aren't gonna like this one, which makes sense. But that is very funny, I think. I just need to make more controversy content. Yo, let's start some drama. Speaking of drama, I don't want to start drama. However, comma, however, comma. That's interesting. Okay. Yeah. iRobot. They're up 20% today. Okay, so for those of you who may not know, iRobot has announced that they are going bankrupt. They have lost the fight. Our second quarter performance fell short of expectations due to persistent market headwinds and delays in scaling production and sales of our new products. To my Roomba. Exactly. While we made meaningful progress on gross margin expansion, tightened control over operating losses, and improved net losses, our cash position continued to decline as we supported new product launches. They burned a lot. I think they burned like $30 million in cash, posing ongoing challenges to liquidity and operational flexibility. Although early consumer response to our latest product launches has been encouraging, broader market pressures and financial constraints remain significant hurdles to improved performance. And so what this means... Where'd it go? I thought it was here. iRobot is I forget. iRobot is a consumer. I forget that iRobot is a consumer electronics company. iRobot files Chapter 11 bankruptcy and plans to sell to their manufacturing partner. So what happened was iRobot started to take on a lot of debt in 2022 and 2023. This is when they started to lose significant market share. We'll get into it in a second, but basically, Amazon tried to buy iRobot. This was sort of a big deal. They got stopped, and they lost all their market share because Chinese companies came in and flooded the market. Around the same time, iRobot started to take on a lot of debt in order to continue to try and compete in this very quickly becoming commoditized market. And so what happened was there was a company, the company that actually physically made the robots started to buy a lot of that debt. And that company was Shenzhen Paisia Robotics Co. This is obviously a Chinese company. And so they started to buy a lot of iRobot's debt. And so iRobot eventually hit the point where they just couldn't they didn't have the cash flows, their debt is just too much, and so they're selling their entire company to Shenzhen Paisia Robotics, which is not great. They're going through a restructuring plan. They're selling basically their entire company to this Shenzhen Robotics, which is Shenzhen Paisia Robotics. It's unfortunate. There has been a lot of talk about this, and I want to there's been a lot of people that have been talking about iRobot, especially on Twitter. Joseph Carlson is one of the big ones. I respect Joseph Carlson a lot. However, I think he's a little bit misguided in some of the things that he's said recently. There are a lot of people that are dunking on Lena Khan and I forget her name, the Congress lady that really likes to stop acquisitions. Anyway, there have been a lot of people that have been trying to dunk on these people saying, oh, well, you guys shouldn't have opposed the opposition. Because if you remember, Amazon acquires iRobot. Amazon. Oh, this is actually exactly what I was looking for. We'll take a look at that in a second. Amazon and iRobot signed an agreement for Amazon to acquire iRobot. They were going to buy the whole company for $1.7 billion in 2022. Currently, the company is trading at $30 million. So they were going to buy right around here. They're going to pay about, I think it was like $81 a share for the company, which would have saved the company basically. Because even in 2022, this was when iRobot had just started to lose the war. They were just starting to lose to some of the big Chinese electronic firms where, it's cool that iRobot was able to make a sort of new category of product for consumers. Before iRobot, the Roomba hadn't really existed. And I think even Roomba is a verb now, right? So everybody that, not a verb, a noun, everybody that owns a little machine that cleans their house calls it a Roomba, even if it's not a Roomba, I think. Although Roomba was the biggest player in this market for a very long time. But anyway, Amazon wanted to buy the company for $1.7 billion. And basically what happened was the European Union stepped in and said, hey, we think that this is going to create anti-competitive business practices, which probably. And so Warren, her name is Warren. I forget her first name. Senator Warren. What is your name? Elizabeth. Beth. So Elizabeth Warren and at the time the chair of the FTC, Lena Khan, they both came out and said, hey, we think that this is going to create anti-competitive business practices because if Amazon owns the company, then they will very likely, and I think that ultimately this is probably what happened, that they would stifle competition and that they would intentionally bury competitors to iRobot and to Roomba in general underneath of the Roomba and iRobot, the iRobot's products anyway. Which I think, and funnily enough, the reaction to this, I think, is the ultimate justification that these people were probably right. That like, oh, well, you should have let Amazon buy the company. Well, why? Well, because they would have done anti-competitive business practices in order to justify this company that was fighting in a very heavily commoditized market already. Amazon, you should have let Amazon do their anti-competitive business practices. Well, why? Well, because now everybody's going to have a cheap Chinese robot in their house mapping their home, which is the fear, I think. But anyway, more importantly, I disagree with a lot of people that are coming out and saying, oh, well, Lena Khan and Elizabeth Warren are the problem here, when this isn't necessarily the case. iRobot literally said in their own filing for this that it wasn't Lena Khan and the FTC and Elizabeth Warren that were the reason why they're abandoning this merger. They said it was because of the European Union. Let's see if I want to find this exact filing. Let's see if I can find this exactly. Here we go. Okay. So here is literally the exact filing from when iRobot said that they were abandoning the merger of their two companies. Where to go? The termination agreement. By the way, while I find this, the termination agreement between Warner Brothers Discovery and Netflix is $5.8 billion. The termination contract for this was $53 million. So basically, Amazon said, we will pay you $53 million if we are not able to acquire you. And Amazon paid iRobot $53 million when the European Union and the FTC basically said, hey, we're not going to let you combine with this company. Okay, here's the actual filing. Amazon's proposed acquisition of iRobot has no path to regulatory approval in the European Union, preventing Amazon and iRobot from moving forward together, a loss for consumers, competition, and innovation. Literally, iRobot said it is because of the European Union. Now, granted, I am willing to concede, of course, that Elizabeth Warren and Lena Khan basically did come out and say, hey, if the European Union does let this go through, we're just going to block it anyway. And so there was no way that this deal was going to go through either way. But the fact that everybody is blaming our FTC and here is not necessarily. I think there's more blame to be had elsewhere. Specifically because that's exactly what iRobot literally said. But it's really easy to dunk on politicians you don't like in the United States. Especially on Twitter. Especially when those tweets are 4 years old. 3 years old. Anyway. Can I find the separation thing? Yo, what was that? During the transition period, you will remain an at-will company employee. Be paid your current base salary of $850,000 a year. Yo, that's wild. I want $850,000 a year to run a failing company. Be for real. And $850,000 is just base salary. That's not including all the iRobot stock options that the guy got. Insane. But yeah, so iRobot is dead. Very unfortunate for the consumer, I think. An ode to iRobot is their history. They have made, by the way, I might reach out this up and put this at the beginning of the video, but iRobot has kind of an impressive history. So iRobot started as an idea inside of MIT Boston Robotics Lab. MIT Robotics, Colin Angle, Helen Greener, and Rodney Brooks co-founded iRobot in 1990, and they originally developed Genghis, which Genghis, if you don't know, it's this guy. Look at him. He's so cool. I want one. But this was originally a robot that they were going to deploy on, I think, the moon to collect samples for stuff. And so this is how iRobot started, was they started with this robot. And then over the years, they got sort of sleeker, the Packbot. And then we got the Packbot, which is kind of weird. This is sort of what made iRobot famous, though, was this guy. He drove around, and he was able to pick stuff up. Look at that, the Packbot 510. Very cool. Now Teledyne owns Packbot. Very well, by the way. They sold Packbot. Tragic. But eventually, iRobot created the they created the Roomba. The very first ever Roomba was their third invention. So they went from iRobot went from moon sample collecting robots. They went from moon sample collecting robots in the 90s to, in the early 2010s, this guy, the Packbot, which could move stuff around. And then they created the robot vacuum cleaner. And then they created the Dirty Dog, which was the mopping thing. They created the first ever mopping robot. Obviously, if you're gonna create a sensation of like you're gonna clean the floors with the little robot vacuum, you might as well create one that has a mop on it. It just seems like a natural progression, I think. But yeah, and so what's really cool is, at the end of the day, iRobot created an entire product category, but it turns out that their product became very heavily commoditized, and then they lost the war to cheap Chinese electronics, which is not an ideal way to go, I think. They sold 30 million home robots by 2020. And they sold 40 million by 2021. They sold 10 million in a year. Crazy stuff. I also do think that iRobot is a great example of a company. iRobot's a great example of a company that iterates on products, finds a product, and then eventually finds a product that sells really well, and then only iterates on that product moving forward. And I think that's a really great way to. I think that's a good way to run a business. I don't think it's a good. I think it's a good way to grow a business. I don't think it's a good way to run a business long term, because at the end of the day, this is what happens to your electronics company, right? You get commoditized. This happens to every electronics company, and unless you're so far ahead of your competition that unless you're so far ahead of your competition that literally nobody's even close to you, and you have to go with this. I'm trying to think of an example of this. What would be an example of this? You can make a case that Apple's sort of doing this, that their products are so far ahead of everybody else's. Now, obviously, the Android ecosystem is good, but Apple's ecosystem, that might just be an ecosystem argument, though. I would make the case for Sennheiser headphones, that Sennheiser headphones are so far above and beyond everybody else's headphones that you shouldn't be using any others. But that's my personal opinion as a guy who listens to music sometimes. Canon sort of does this with cameras. They're very far ahead of everybody else. NVIDIA definitely does this too. You know what? Actually, I think TSMC is a good example. TSMC might be the best example of this. TSMC has a product, and their product is that they make chips for everybody. And their technology is so... ASML is a great example of this. Literally nobody can compete with them. ASML is a great example of this. This is a tech company that is so far ahead of everybody else that number 2 isn't even in the rearview mirror. It's like a couple states away, right? ASML is a company that makes the lithography machines for Taiwan Semiconductor. And of course, Taiwan Semiconductor is a company that makes most of the computer chips for most of the world. They control something like 60% of the chip making market. And so ASML's machines are so advanced, which, by the way, just look at that thing. ASML's machines are so advanced that they're so far ahead of everybody else that number 2, again, not even in the rearview mirror, can't even see them. They're so high up. This is a good example. And this, of course, this is not a consumer electronics company. So it might not be the best example in the world, but it is an electronics company that has managed to continue to be so far ahead. And also, a lot of the reason why they're so far ahead is because Intel basically gave them a blank check to develop technology that they then used to compete with Intel, which was not a great business strategy overall, I think, just in general. Let's see. Is there a really good... Yeah, I mean... Well, actually, funnily enough, DJI is a good example of this. Unfortunately, DJI got banned in the United States. DJI is a great example of a consumer electronics company that's so far ahead of everybody else. Number 2, you can't even see them, right? And this is actual consumer electronics. When you think of drones being flown in the United States, there's almost no other option than DJI. There's no one even competing with them. Now, obviously, there's competition, but a lot of the competition is industrial grade. It's not necessarily like drones. But yeah, and funnily enough, DJI is a Chinese company as well. So, kind of tough way to go, I think. But yeah, DJI, it's great. They make good drones. I fly DJIs from time to time. I've flown the Mavic 3 and the Air. They discontinued the Air, I think, but I have the DJI Air 2 and the Mavic 3 I've flown. I kind of want to buy the Avata. Avata is a lot of fun because Avata, by the way, fun fact, Avata comes with the VR experience. It's called an FPV drone, first person viewing. It's cool, and you get the little joystick thing. It goes fast, and it's quick. It moves quick. Anyway, yeah. So DJI is a good example of a sort of like Roomba-like company that is very far ahead of everybody else. It's very far ahead in terms of consumer electronics. But I will say this. DJI got banned in the United States, so they can't really compete all that well in the United States anymore. But DJI, I feel as though in a couple of years, competition will come along. Competition will come along, and either DJI will continue to maintain that lead, or there will be another, hopefully, American drone maker that comes along and is able to compete in terms of performance. Although I somewhat doubt that's going to happen in the next couple of years. I can't even think of a good alternative to DJI drones, to be honest, that are even close to the level of camera work you can get out of these guys. But either way, very sad to hear about iRobot. Ripped to Roomba. They're now owned by, although, a hot take. Here's a hot take. iRobot's up 14% today. They fell 85%, and now they're up 14%. Let's go. If you want a really hot take, you could potentially bet on this company. You could go out and you could start buying shares. I wouldn't recommend it. The reason why is because a company in the United States could come along and buy iRobot. There's a chance. I don't think it's likely. Now, actually, honestly, Amazon might come along and buy iRobot now. I don't think it's very likely, but it could happen, especially with the regulatory environment that we're in right now. I think that there's a chance that the current presidential administration comes out and says, hey, we don't want iRobot being sold to a Chinese company. Why don't we start the bidding at $50 million? And then they end up selling to Amazon anyway. So there's a chance, I think. Anyway. Maybe it will be such a national security. You know what? Someone should go convince the president that's a national security concern. So he goes and takes a stake in the company, like he did with Intel and MP Materials and U.S. Steel. You know, someone should go tell that guy that he needs to. The U.S. government should nationalize iRobot. Robot vacuum cleaners made by the United States government. That'd be fun. This is something like stupid that I would buy. Like I'd go out and I'd buy like some shares in iRobot and be like, yeah, don't worry guys, they're gonna get bought. And then, yeah. By the way, I think the purchase price for iRobot from Shenzhen Paisia Electronics is basically zero, because iRobot owes them so much money that the purchase price is basically zero, I think. Let's see if I can find out. iRobot announces strategic transaction to drive long-term growth plan. Oh, they're just going through Chapter 11. That's tough. Anyway. Actually, I'm curious about something real quick. iRobot 11.6. Yeah, let's take a look. I'm curious what they think their goodwill is. $182 million. Yikes. It fell, what was it? It was $4. It fell, let's say it's fallen 90%. So they were trading at $300 million. Yikes, dude. That's tough. Goodwill only $182 million. Unfortunate. Yeah, and so this is what I was saying. So they have $25 million in cash, but if you look, their current liabilities is $480 million. Their total assets is 481. Total current liabilities is liabilities that have to be paid by the end of whatever their fiscal year is. So that would have been like 3 months away. So they would have had to figure out how to pay $200 million, $400 million total, to ostensibly Shenzhen Paisea Electronics, and they just couldn't do it. And they especially couldn't do it because net cash, yeah, they're not cash flow positive. They're losing a lot of they're just losing crazy amounts of money. And that's because, obviously commoditized. They got commoditized. Very unfortunate. I think that's just about it. And I think I'm probably gonna end stream. I think that's good. Gonna go edit these videos. Gonna get them out next couple days. I think I got lots of shorts too, which was very funny. Anyway, if you enjoyed the video, come hang out live and subscribe. I might do an actual intro or an actual outro. Very well. Yeah, that's gonna do it for me. This is a lot of fun. This is a lot of fun. Thanks everyone so much for hanging out. I'll see you in a couple days. I might stream Thursday and Friday. Cause yeah. Anyway, and I might stream all next week too. But anyway, thanks everyone so much for hanging out. Thank you, Lucas. Shouts out. See everyone later. Have a great day.